Morning, everyone. It's start of the final full trading week of September. It's September the 22nd. It's the autumn equinox here in the northern hemisphere, or the spring equinox if you're in the southern hemisphere. That's half day, half light as far as the daylight and the darkness is concerned here in London. It's very cold this morning. It's about it's only about 12 degrees, so the temperature's dropped very significantly here in the UK today, and it's supposed to get cold as well. Anyway, over in Germany, the markets have started quite cold as well. The DAX here, his Friday's close. Um, I've only got one strategy left on my trade locker at the moment. It's got rid of all of my others. This is the Bollinger Band and the stochastic setup, and we look for a cross of the K and the D line. There we go. Saying I've got too many draws lines on it already. But anyway, we'll play with it as we can. We're looking for a touch of the outside of the Bollinger Band with this strategy. It's a mean reverting strategy. It's not one of my preferred trend following strategies, but it works just as well as any other strategy, and it's as effective as most strategies. It's just that when people use it, they tend not to follow the rules. So it doesn't work as effectively for most people as it does for me. But there we go. Such is life. Such is the issue with trading, and it's all about psychology. Really, the success in trading. It's all about understanding yourself, and it's all about accepting those losers when they come along because they inevitably do. Anyway. Friday we closed at 23,675 around that number. So that's Friday's close. Friday's high, if we just go up to the hourly time frame, it was a down day Friday. So Friday here, 19th. Where are we? Friday. I should have done this before we got on. Friday. So it's generally a down day. As you can see, there's the close. So it's generally a down day. We've been up, we've been horizontal, we've been flat in the middle of the week. We had a good day on Thursday, but we were down on Friday. If we look at the daily time frame, so what does that mean for Monday? See, it's very choppy. Big down day, big up day on Wednesday. Then we were down. Sorry, big up day Thursday, and then we were down Friday. So we're still in this under half of the Bollinger Band on the daily time frame. So it's still relatively weak. Last week's low took us all the way down here at 23,275. So we'll put that on as well, just for good measure. Whether it stays on or not, I don't know. Probably won't. But that's last week's low. Last Friday's low, we're already below that. You can see that. That's where we closed the blue line, and Friday's low is where we are right now. So we're at the low of Friday as well. So potentially another short day today. Anyway, as far as our 5-minute time frame is concerned, this strategy would have triggered first heads up would have been actually it hasn't actually touched the Bollinger Band, so it's not. So that's a continuation trade. It wouldn't have actually gone long there, although that's a looking to go short here. The cross of the K and the D line on our stochastic here. The stochastic here on this strategy, remember, is set at 10.63. It's a little bit different to what you might see normally, but anyway, this 5 minutes into the open. We're still 20 minutes away from the actual opening cash session, so we're down. Will that continue on the open? It's a lot of news to move things today. Lots and lots of Fed speak and other central banks speak this week. We've got the Swiss National Bank with their rate announcement. No change expected then. We'll come to the calendar in a wee while. But you can see here we've been stuck on the lower band of the Bollinger Band. We're moving down. The 20-minute move, 5-minute moving average is down. The Bollinger Bands are moving down. We had a bit of a squeeze here at 7 o'clock, which is actually to the upside, but we're still way short of the midline. And then 5 minutes past 7, big down candle. Lots of European traders would have entered at that point, I'm guessing, just on the movement of the down candle and at 5 minutes trying to test low. So we could reverse this actually at 8 o'clock, but at the moment we've pushed low. So let's just put on for this. That's the start of the day. Friday's low, remember, is where we are now. We come to Friday's low and we're under it. We're sort of messing around with it. 23,600, 23,603. So there's buys at 23,600 so far. um, this morning. Where does that take us? What's a round number, so it's going to come into play if we just move that up a bit. You can see 23,600 was back there on the 18th. And then on lower on the 18th at 2 o'clock here, we went down to 23,575. So we haven't got that low yet, but let's just put that on because that's another potential area, target area into the open, which we got within a smidge of, and then we bounced back. So we got some buying at 23,600 on the DAX is what this is showing us this morning. See the big rejection candle. Sorry, that candle there at 725, the big rejection of the low. So some traders have been short all morning at the early morning rises in Frankfurt and London, and obviously elsewhere, taking this lower and very much in the money to start the week again. So this strategy, as I say, would have had a tentative short there on the size of that candle breaking the midline, and then it would have taken some profit as it's gone to the outside of the Bollinger Band. It's rejected the move back into the upper half of the Bollinger Band, and then it's gone short again and created a new short, and it would have entered again there. See that new low fall there? So it's not a new low for the day; it's a new low for the Asian session, isn't it? That from 4 o'clock, the early European session. The low of the day was earlier on as the markets opened, which took us through, which was this big trigger candle here. See that one there? So the pre-market low, if you like, or the Asian session low, so far today had been here. Let's change the color of that. Make that, I don't know, make that bright green. Hope you can see that. So that was the pre-European open low, and we've gone through that. So this is now our new pre-open low. Is this low that we've sort of put on here? This zone all the way back from the 18th of September. So, well, where are we? Yes, so 15 minutes before the open. So the pre-market low is close to this low. So we've already breached that. A lot of that would have triggered some profit taken from these short positions here because we got to the low. There we are. That's from this morning. That's from Friday. That's Friday's low. No, it's not. No, it's not. It's Friday's low there. So that was the sort of closing London European trades here at 7:30 on Friday. It was around the low that we got to, Asian low, and then we burst through that as the Europeans have got back to their desks at 7 o'clock my time, 6 o'clock 8 o'clock in Frankfurt. So they've pushed it lower again. So we had a low day on Friday. We're lower again into the open. Let's see what the actual cash session brings us. But we're still short here on this 5-minute chart. Obviously, the volatility is starting to pick up as volumes will start to kick in. If I just put the volume indicator on here as well. It's just an indicator here. It's not. See how it's picked up from 7 o'clock or pre 7 o'clock. The first one was there. Big volumes have started to pick up. There's that buying at that low there at 1 o'clock, and there's the opening trades. The closing trades from Friday. Big volume here as we closed down for the day. So we're down or short, and we're sort of in the money on that one. FTSE may be different. There's lots of different things have moved the FTSE. So technically, that was gone short there, and again, that one's been short from here. Breach of the midpoint of the Bollinger Band. See the Bollinger Band started to move down. The the stochastics have crossed and come out of the overbought area, so we're short from here. Trailed the stop loss down. If you got your stop loss a bit too tight, you might have got stopped out. Obviously, the spread is a bit meaty at this time of the day, but we're still moving down. That's why I prefer the DAX to the FTSE, but it's still a short position. You haven't got your stop loss too close and still been in the money on there. And again, with this one, there's Friday's close. We were up here. Sorry, we were down here and we're below Friday's close. The action from Friday, if we just go up to the hourly chart and see the action from Friday, took us to this low here. So that's an intraday spike on the data at 10 o'clock yesterday. So we'll just put that uh, on our chart, see what happens perhaps later on. But you can see there's the close, and we've been down all day under the 20-hour moving average movement. The Bollinger Bands have been like nicely sloped lower, so we're down and down. So that would be short as well into the obviously it's all pending what happens on the opening trades. Remember, the opening trades are the real cash session, the real stock markets opening in particular. That has an impact on forex and all the other markets as well. So there may be some, news over the weekend that's affecting particular companies, particular indexes. There hasn't been a great deal of news. The only major news was the Trump administration's announcement that they were going to increase the fee. I think it was only like $230, or they started from $230 for HB1 visas for the US. They're the ones that the tech companies use all the time. 70% of those visas issued are to Indian nationals. So obviously, companies like Tesla and Oracle, the big movers, last few weeks employ a lot of tech experts from the Asian region, and that's looking a bit potentially a little bit sticky for that. That hasn't really impacted markets. It's really a central bank chatter week this week, this third week of September. But as I said last week as well, the third week and the fourth and third week of September can be particularly volatile. We obviously had the volatility last week from the Fed finally cutting rates, and that's been and gone. So the issue is, where do we go from here? As the more to come, and as I said in our note on Friday, the dollar, in fact, sort of improved the last 3 days of the week. If you just look at I don't know, Euro Swiss as an example, go up to the hourly chart, you can see that the third Wednesday's reaction to the sort of less sort of hawkish tones from sorry, the less bullish he was about more rates to come. The dollars improved very significantly, and had another good day on Friday as well. And we're up again this morning, although interestingly we opened lower and we're just poking higher against the Swiss franc. But anyway, that's potentially with the Swiss franc. Still the Swiss National Bank this week still to come. But as you can see here on the daily time frame, it's still below the key 20-day moving average, and under half of this Bollinger Band. It's still short, even though it's bounced for a fourth consecutive day now, and that's looking like quite a significant bounce. So a significant breach of that 20-day could look for buyers, and will take us back over .80 and to the top of the Bollinger Band, which stops at .8076 to the upside. But there's a long way to go before that happens. But anyway, the point is, the dollar's bounced a wee bit. I think there's about markets are pricing a 45 basis points cut for 2025 still. So there's two more meetings from the Fed, obviously, next month, and then again in December. There isn't one in November, end of October. So see some of the key Fed members have got speeches this week. Powell speaks on Tuesday. Williams, I think, is speaking today. Myron speaks today, the new boy, the government man, the inside mole, if you like, speaks later today. Let me just show you these. So there's lots of. Why isn't he? I thought Myron. I'm sure Myron. I've seen Myron. We're speaking to on a different calendar. Perhaps it isn't. Perhaps it's tomorrow. I misremembered. But yeah, John Williams, head of the New York Central Bank, he speaks later on today. Head of the German Central Bank, Nagel. Lots of chatter. Bailey, head of the Bank of England, today as well. PMIs tomorrow across the board. Powell's speech later on tomorrow being quite key, following his performance in front of the press on Wednesday. Wednesday sees it's Homes Week as well in the US, so they've been particularly weak. So we'll see what the new home sales, building permits, continuing sales are looking like. Thursday is the key day. We got durable goods. We got the jobs claims, existing home sales. Michelle Bowman speaks as well. Remember, she was a big support for more cuts. And she didn't actually vote for that at this meeting. Be interested to see if she gets called on that. I don't think there's any questions that these presentations have got. Barr and Bailey, and also earlier in the day we got, as we said, we got earlier we got the Swiss National Bank with their policy announcement. No change expected from them. In fact, a chatter of potentially going negative on the which is, might be affecting we see on the Swiss franc again from the Swiss National Bank. Friday is the key core PCE price index number. That's a big number I'm looking for. Many market participants we're looking for the end of the month. Lots of portfolios will be getting closed for September book and the third quarter book. So expect more volatility as we come into the end of the week as well. It is September as well. It's notoriously volatile, as I said earlier. And also, we have the University of Michigan with their inflation and the key consumer sentiment expectations later on in the week as well. So, plenty to get your teeth stuck into. Certainly Thursday, Friday. I'm not around tomorrow and Wednesday, so these events won't take place tomorrow and Wednesday, but we'll be back with you on Thursday. Anyway, let's go back to where are we? We're 10 minutes into the head of the Open. Let's have a look what the Euro's doing. I'm sure a lot of you don't trade the Swiss franc on a short-term basis. Euro bid this morning, nicely bid as well. There we go. Down outside, touching the Bollinger Band. The cross occurred there, so your short would have been closed there when you actually it hasn't touched the outside, so you haven't gone short. That's a long position, waiting to go long at the same time. So we've touched the outside of the. That's a nice move from whatever that happened. Again, obviously, if you automate all of this, guys, you don't have to be up at 5:30 to trade that. So that would have been a first long position. In fact, it would have happened on this candle there. No, it hasn't. Well, that's the first indicator. We've touched the outside of the Bollinger Band. The K and the D line on our stochastic has crossed here at 5:30. So that's taking you long there. It's closed. I think I've got this one programmed to close 75% of the position at the Bollinger Band, and then the second half of the trade closes here at the outside of the Bollinger Band. Right, and then the rules with this is because it's touched the outside of the Bollinger, we're looking to go short. But as you can see here, the cross there that would have been a potential short position here because the Bollinger Band, the blue has crossed from above to below the orange. We've touched the outside of the Bollinger Band edge, so we've gone short. We've gone short there, and then but immediately stopped out 5 minutes later, and then so it's a continuation trade now. So we've gone long again at 7.25. So this was the short failed. Obviously the long was nicely successful. That short actually you might have actually got in there. It's confirmed the short and it was coming out. So you've gone short there, but it's stopped you out immediately 5 minutes. So that's a losing trade, but you've then gone long at that point there as a continuation trade because the trend's still up. We're in the upper half of the Bollinger Band, and although the stochastic hasn't crossed, the Bollinger Band is suggesting we go long. You could have then entered long again there, where we've had a cross of the stochastic. That's the sorry, it's not that one. It's that one there. That's the proper long. So that let me just put the paper. So that's gone long there. Long there. I guess. Um, so it's gone long here to there. That's out, and then second half is to there. You can see it's touched the outside of the bottom. We're looking to go short. We get short. Probably would have got on that one there, short there. Our stop loss would have been at the high of the day, so it would have gone short here and continued to go down, but it's stopped us out here, and then we've gone long on the next candle. So this is currently long from here. So we're in the money on the euro again, having got stopped out. Having won that one, went out long and your stop loss would be down here at the moment. So that's the euros long. So let's just go back to the DAX and see if how many of our lines have stayed on. There we go. We're still it's off. So let me just take the volumes off because we know they're going to spike up. If I move this up, this is too big. Take that down again. Let's get rid of the see the ATR rising is the quality. There we are. So this is still short, isn't it? We're still short. My stop loss now would be around here. There, we got to that target. So again, I would have probably taken some profit off that. Remember what this target was? It took us all the way back to that low, the US Open. This is 230. This is the US Open on the 18th of September. That's Thursday's low. Sorry, not Thursday's low, but the next significant low in this setup. We can see here I've got the push on. So we go up. It's hard to clearer view. There we are. There's the hourly chart. See what a big down session we've started. There's that low there from the 18th. Where do we go from here? Well, you see the 5-minute chart giving that detail, but there's a big up. There was sort of area down here. So 23,500 is the next, or 23,499. So 23,500 is the next down level. Remember, this moved aggressively here in an hour. That's the open of the on Thursday when we had a strong day. Remember what Thursday looked like? We've got the daily time. That was a strong day to the upside. As Thursday's kind of big up day. So that might provide some significant resistance to the downside. So we may turn at this point, this 23,575 area. We may go lower on the shorter time frames, but at the moment the trend is short. I'm not closing any of them. There's no reason to get out of these short positions from earlier on in the day, but big old move down. What's the indicator telling me at the moment? Well, we are here on the 5-minute. It's on these short 5 minutes. Now we are moving into the stochastic is moving into the overbought area. So there may be some buyers here as the volume kicks in at 8 o'clock. But for my stop loss, so we've pulled the stop loss down. Our stop loss will be through here now at 23,591 from these initial entry up here at 23,661, 23,585. So nicely in the money to the downside through our initial target where we'd have taken some of the profit off. And to be honest, I would have, if I'd been trading this morning, I would have closed out and waited for the action of the open now because I've hit both the two areas I would have been looking for. I was really ambitious to get to this 25, so I would have this. I've been trailing this morning. I'd got up. I don't know. I think that's a bit early. I've probably been around about here. Whether I'd entered here or not, I'd have seen probably not. That would have encouraged a short on the big candle there at 7:05. But again, you could have thought that's a bit of a buy. But the trend was down, and yeah, I'd have been out at there, and then final would have been here because we'd set all this up before that. We said earlier, so we did get to that 23,575 area. So we're out in the money, and let's see what's happening with the open. The FTSE is a similar position. In fact, the FTSE has turned, doesn't it? So as FTSE would have stopped us out there. Stop loss would have been there, pulled down to that level, and we've got stopped out at 7:45. So this is turning to the upside. There we go. There's the cross on there's the touch of the, well, it touched here, you can see it touched on the outside. So we're looking to go long once they cross. So that would have crossed there. So this would have been short from there to there. FTSE's gone long there on that cross, even though it's even though it's still in the oversold. You've been a bit aggressive. You could have bought it again as it's come out of the overbought area. So there's two bits of risk on ahead of the open there. That's what that's telling us. But we'd like to see, a break to the upside of the Bollinger Band there. So that's tentative long. Again, hit first target at the Bollinger Band. and there we go. We're going long, so we're dragging my stop loss up now, which would have been down here. Stop loss at the 20-day now. So FTSE opening to the upside. Where are we going? Well, you can see we see where Friday's closed at 9225. That would be my next sort of initial target area at the open. Remember, this is literally the opening trades as we go through. So it's a positive start for the FTSE. Let's have a look at the DAX has turned around as well. The DAX has not turned around, so the DAX continues to decline. Although, as we just said, we are out of this because we've got this second target. And let's just see how the opening trades go. So, for a change, the FTSE is a bit more volatile than the DAX here at the European Open to start the final full week of trading here at the autumn equinox. So the FTSE has very much got us in the money. So there's our entry, there's target one, and there was target two. So bish bosh from 7:35 to the opening trades at 9218. So we'd have got in here at 9208, got out at 9212. So 4 points there, and 10 points to the top of the Bollinger Band in that opening trade. So there we are, we're done for the open. Okay, it's still long, but you can see how the volatility is picked up. So there's a danger of trying to buy in this session. See how the spread, hope you can see that, see how the spread has tightened up now that the cash session is open, and it's still quite volatile given those opening trades going through the system. So you can literally see there, people complain about the spread, but this is literally what's happening in the market. This is live liquidity feeds. There's a flurry of trades come through on the open, as you can see on the volume here. Look how much that is. It's like 4 or 5 times. 1, 2, 3, 4, 5 times the 6 times some of the overnight. This 7 o'clock, this 6:30 volume here. Look at that one there at 6:30, and look at what happens at 8 o'clock, an hour and a half later. So the markets are open. All the European markets are open: Frankfurt, Amsterdam, Berlin, and Paris, and London has joined them as well now, and we've had a spike, but it's all been bought out, hasn't it? We don't care though. We got out as we spiked to our upper Bollinger Band target level initially, because that's what the system would do. Obviously, a target, if this trend up continues that we've seen for the last half an hour, and bottom here, obviously we might have a go at Friday's closing area to that 9225, but not immediately at the moment, but we are positive at the moment. This could again all turn around, couldn't it? See what's got any more action on the DAX. We have had a buy spike. So remember, my stop loss would have been around here still. If I'd kept this open, if I'd been looking at this manually, I'd have definitely closed out at the. Don't get too greedy at the 23,575 area, the pink line here. But if this was still trending, you're taking the risk of actually holding through the open. My stop loss here on this 5 minute is here, and it looks like that's going to get taken out. Anyway, so a little at 23,591 to the downside, but the trend remains very much to the downside. If you look at the higher time frames, so we'd just been looking at the 15-minute, that's still negative. You can see those areas a bit more positively. So that would have been on the 15-minute, you might have had a first target there and another target there. But we'd already seen that, didn't we, on the 5 minute? This was the 7 o'clock candle one we got in, so we'd already got to that level, and we were still moving lower. And again, you can see there's a big leg down to the next level, and at 23,500 you mentioned earlier, still move to the downside. But again, the 15-minute trader still short. We stuck to the outside of the Bollinger Band. We are showing signs of a cross to the upside, and we've already saw this on the completion of this candle it's actually crossed there. So this, the 15-minute candle has gone long here. So the 15-minute candle using this strategy, this crossing the stochastic and the Bollinger Band on the 15-minute strategy has gone long here and is actually in the money already. So again, it's all about the time frames, it's all about your approach, guys, and what works for you. So, but that's still a downtrend, isn't it? You can see that's stuck on the outside of the Bollinger Band. We have got an up candle on the open, but that might all get fizzled out quite quickly as the week gets up and running. 30-minute, interestingly, was looking for a short there. That went short, and that went short there. In fact, it's at 4:30. And then it could have added to as it's gone under the Bollinger Band there at 6 o'clock, 30-minute, and the 30-minute trader is still short to the downside. And he might be looking for a bit more of this chunky into that level there, into the chunkiness of this half an hour candle there. I mean, he might have broke that up for half of that, so his target could be round about there. That is a bit. So I'm just doing a breaking up the so 50% of that candle is here, so it's already got to it, and that's that level there. Interesting. So see what I did there? Sorry, let's just get rid of that. What I did a little fib of this 30-minute candle here. There's a 30-minute trader. This is a target area we'd got to already, but what's next? Well, this is a big candle. So how do we? I mean, obviously it was positive move up and it retraced again, and 50% of that leg moved higher again. But the immediate momentum to take us down through that candle. So if we put a little fib on that, just to break up the distances. So that was the top of that 30-minute, and that was the floor of it. And you can see that 50% of the move of that candle, the average, the range of that particular 30-minute was our target level here, which is the low here, which is, again, would have taken some of these short positions here from the Asian session on this particular asset down and would have closed out at this level here. The continuing guy might have just come in a bit late and looking for this trend to continue. Like 50% of this entire move is actually here, actually. So it's and the next level, that 38 fib, is already there as well. How significant this is not, it's just my eye caught catching that. So we've already got to that level as well. See the 38 fib, the lowest level, we've targeted 23,545. I mean, more importantly, we're under 23,550 here. So anyway, that's the 30-minute. And as I said, the hourly trader would have triggered short. I've already fed the dogs. My wife's feeding the dogs again. I've already fed them. Never mind. I'm sure they'll eat again and hear her feeding the dogs. In the home office this morning, as you might have guessed. So the hourly trader on this strategy, there's the cross. We haven't touched that, and in fact, he's not in. The outside of the Bollinger Band was last touched back here on Friday, and this is crossed outside of the Bollinger Band. And so this is now looking to go long, potentially. So there you go. The trend is outweighing that. On there, because we need a cross to the upside now, because we've broken out at the bottom of the Bollinger Band. But you can see there the squeeze happening really quite nicely there. So that's very important. We can have a big old move, so ignore any mean reversion. That's that for the hourly trader there. Very, very interesting. We've got a squeeze here at the 6-7 o'clock candle, so very much short there, and they're still short. The hourly trader, which is more my approach on those higher time frames, but that's short. It's also then you can see how the K and the D line have then crossed during that hour as well, not in an overbought area or anything, but they've crossed. So that's confirmation of potential weakness to come. And down we go on the previous candle. So this is still weak. So the hourly trader will be looking for a target down to this the bottom of this candle here at 23,495, and they're still very much short with the stop loss probably still up around about Friday, well, not possibly Friday's high, not Friday's close, given the veracity of that move down in the hourly candle. So there we go. You see, guys, same strategy, different time frames, different approach. Has the 5 minute turned around? No, it hasn't. So there we go. So the 5 minute strategy remains short as we've gone down. If we, I say, if we'd stayed, kept this open, as we said, our stop loss would have been here as we were trailing this lower. However, what have we had? Well, we have had now across the MACD. So as I said, the 5 minute has gone long here on the open trade. Stop loss would have been all the way down. Again, if the risk of trading the volatility, I wouldn't normally do that. But that has sort of triggered a longish position on open, but it's all been sold off, hasn't it? So that's a false candle by looks of things at the moment. That may have been again stopped out. But again, the stronger trend is still to the downside, even into the open. So the trend pre-open has ran through the open at the moment, although we're only 10 minutes in, and we continue to move down. So our dogs are getting a double breakfast this morning. I can hear them eating downstairs. Very good. My cousin just sent me a picture of Mercury, the moon, and the sun rising in Australia this morning. Good morning, Melbourne. Anyone in Melbourne here? So there we go, down. So that's another successful trade in the open. That again, if you'd taken that, that's stopped you out. But we're still short. So now my stop loss now would be down on our target. Well, so I'd have been out, but this is perhaps enough to that failed long would have been enough to get me short again on this. Well, probably during now, to be honest, as we go to the 23,500. So we are short again as a continuation trade. This failed bounce beyond the 5 minute time frame. Remember what the higher time frames are doing? They're all still short one as we went up to the 15 minute. Looks like it may be crossing now, but it's still short. Our target area on the 15 minute was where it was. It was bigger. There we are, bigger into that zone there, that 23,500. So 23,500 looks like it may be calling. The 30 minute, we've just been playing with the 30 minute of the big candle. Now we are. There's that big candle we're just playing with. We're now 50% of that big candle. There's the next target area, 23,507 through the top hairs of those candles there. Just shy of that bottom there. So 23,507, 23,500 could be getting tested. So 30 pips in that move potentially. And the hourly trader, as we said, is sitting pretty, having just triggered at 7 o'clock and looking for perhaps a bit more into that area there, halfway the next candle, 23,460. Opening trend is going to continue. That's what that looks like. At the moment, euro was long, wasn't it, when we first last looked at it, last checked it on the 5 minute time frame. Let's go back. So we were long here, weren't we? There, and the opening trade has taken us. In fact, we would have been long here. Stop loss around about there, and that's gone up. Moved that up, and then we'd have been stopped out on the opening session. So that's long turned around. We've had another touch of the outside of the Bollinger Band now, and then we've crossed down. So I see we've gone up and stopped out. Another touch of the outside of the Bollinger Band. We then need a cross to the downside of the RSI, which is there on that one. That's then reversed again. So this is a classic example of the volatility of the open stopping you out. So if you program this strategy just to follow the rules, it would have gone long and got stopped out, short and got stopped out, and then it's gone, and it's finally gone short here. And that's now in the money. But again, the first target would have been here, so it's got in here at 17.43. It's got out um, at the Bollinger on there at 17.40, so 2 or 3 pips on that one, and now it's got the second half of that trade looking to try and get down to the outer Bollinger Band, but again, you trade that by pulling the stop loss down. Stop loss would still be up there on the completion of that. See how we go. Pulled it down to about there now. As this is short term, it's a mean reverting strategy. So see how the stochastics are going down. So some successful long positions here. A failed short, a failed short. The long was okay. Oh no, it was stopped out. Another short one there. So 2, 3 short failures. Big winner earlier. Another winner, and we're currently in the money on this one as well. So as you want to take your choice, but you see the volatility around open as well affecting the forex market. You see how the volumes have picked up here at 8 o'clock. At 7:55, there's the 8 o'clock candle. So again, volumes picking up as the whole trading rooms open up and get running as the cash markets open at 8, and everybody's at their desk certainly by 7 here in London. You see the 7 o'clock candle spiking. Yeah, so here we are, 6:30. Everybody's in really. 7 o'clock candles, everything picking up to start the new week in the forex market. So let's have a quick look at the rest of what's happening elsewhere in the market. So dollar yen. Just got to the hourly time frame. What's happened so far? Not much movement today, as you might expect. We are still big. 8.4. I think that's might have been our target, wasn't it? We were long, weren't we? 48.39. Yeah, so our target has been. Oh, yeah, has it been taken out? Hasn't yet been taken out. No. 36.39 was our target. We were long this from Thursday, so it's not quite. Again, it's not with a pip. Oh yeah, see the top of that candle there. It's got to 148.37. It's got within a pip of our 138, 148.39 a target, and it's come back down again. So that's still long. Stop loss will be beyond entry now, so we can't use on that trade. 147.98 we got in. Just shy of that. Dollar CAD back to 138. We moved down on Friday. Significant move down on Friday following the data. And we regained all of that now back to 138. So dollar up against the Canadian, weak Canadian. Aussie 65.75. It's come down quite significantly. Obviously, you're at 67 on Wednesday. And continuing the reversal or the bid for the dollar back under 66 again this morning. Sorry, back under 66 on Friday, weren't we, into the close, and we're down to 65.75. That's key level for the Australian dollar this morning. I thought there was. It's not on our calendar. I'm sure there was. The head of the Australian Central Bank had a speech this morning. Perhaps I was looking at the wrong calendar. Maybe last week or next week. So, anyway, plenty of chatter, as I say, to come this morning. So the head of the German Central Bank, the chief economist of the Bank of England, and one of the key players in the Fed, Mr. Williams, this afternoon as well. Rogers from the Canadian Central Bank, she's deputy, and then the head of the Bank of England, all lots of speak from following their announcements last week, all central bankers, and then obviously this week, as I said, we got the Swiss National Bank with their announcement on Thursday. So there we go. Any questions, anybody? Only 50 minutes. It's still quite early here. We've got another fairly successful start to the week. So let's just have a look what else we are. Dow is the other position we've got open. We're still in the money there. I think stop loss. This is the 1 hour time. There's always it's not Friday. Yes, Friday's spike. So again, Dow's been down. So the US futures are lower. This is our entry. So we're in the money on the Dow. And the other one we had open was the Kiwi, wasn't it? So I've only got three positions. There's nothing new on Friday night. I'll update the Discord channel in a minute. As I say, I'm away tomorrow and Wednesday. I may take something tonight, but some relatively tight stop loss. But I'll let you know about that later today. New Zealand. I just want to see where we were with the Kiwi because that was the other one that was open. In dollar. There we are. Oh, that's kept the lines on for that. So we're in a smidge. So from being within a pip of our target on the yen, we're within. Where are we? 58.43. Again, we're within 3 pips of our first target for the Kiwi. So we're in the money on that one. I don't know if the stop loss has been taken off, but the stop loss will be low entry now. It's probably around about here somewhere. So again, a trader can't lose now. Again, that's been on since night of Thursday night, so it's held it all over the weekend. Let's look at that. Let's look at some shorts again, potentially there. Anything else turned around. So anyway, target still remains there. It's the momentum is with us at the moment, so dollar's up against Kiwi as it was against the Aussie, as it is against the Canadian dollar. The euros outperforming. I can actually have a look at sterling here. Do we? Sterling still. For the main. We did see sterling, didn't we? It turned around like the FTSE. So again, dollar on sterling on the front foot. Friday and into the Asian session, and dollars picked up a tad here from 6 till 7. So it's back into the upper half of the Bollinger Band at the moment on this hourly chart. But again, it may be looking to limp a bit lower again. Dollar picking up, but sterling's picked up a bit here just in the opening European trades so far. But 134.75. Bit of a resistance area up top of the Bollinger Band now sits at 134.88 and the lower Bollinger Band 134.54, so above 134.56. Clearly buyers around about that 134.60 zone this morning for sterling against the dollar. What was it doing? We looked at our opening trade, so they're all close to. So just to recap, Dow's in the money, Kiwi's in the money, and the yen's in the money. Yen got within a pip of target, but it's still open, and the Kiwi is in 3 pips of target so far to kick off the session. Our scalping, if you like, want to call it that, our opening indices trades, the DAX to start the week again has been successful. Go back to our 5-minute from earlier in the day again. This strategy has worked out really nicely, and again, we'd have been out before the open this morning. To be honest, on our 5-minute time frame, so as I explained earlier, that's the initial short here on the 5-minute. 5, and it's scrolled down to first target around about 23, 26, 620, call it, and then the next target was 23.575, which looked a bit of a stretch, but look what's happened. We've continued to move down. So the flurry, the spike at open has been, that's all that was. It was a little flurry of activity at open, and the trend has continued. That's the beauty of trend following, guys. So our stop loss now would have been is at that target now, and if this had stayed open, we would have at our stop loss now. And as I said, we would have added. The trend would have, if I was still wanting to trade this through the initial hour of the open, the trend is still very much to the downside. So again, as I said, we would have added at that candle during this candle here, 10 minutes past as the new low was produced. So again, another one that's in the money and we're trailing our stop loss down to the downside. So our stop loss now would be round about here, just to look in some extra profits. When trends run, they can't run and run. And this is just adding to the higher time frames, as we said earlier. If we go up to the time frames, I would have linked the 15-minute. There we go. The completion of the opening candle was negative, so it might have given 15-minute traders the impetus to add to their positions. You know, can this can go along here over a long time before we need to see a significant break and a distance between the K and the D line as well. You're on the stochastics, but the trend is very much down there for the 15-minute trader, so he's holding tight. Stop loss again halfway down that candle now. Goodness, momentum's with you. 30-minute trader again, another one that's got in at 6 o'clock, but the first trigger was here back at 5 o'clock, and then added it perhaps at 6 o'clock, and it's again another one with a stop loss. This is the volatility of the open. Wait for that to complete in 4 minutes' time. I'll wrap this up at half past, guys, so we see these candles completing, but that remains short. We saw a rise in the FTSE, didn't we? I think, sorry, we should go back to the FTSE looked like we were moving up, didn't we? We got that cross, and we went long. There's a volatility on, but then it's gone short and sold it off. Oh, it's the FTSE we were talking about, wasn't it? It was rejecting the up move, so it was the FTSE, sorry. It wasn't the DAX, was it? But again, you can see there's the confirmation of the strategy, the crossing of the stochastics there on that candle there. So short there at 8:10, and then a big follow through there later on. Bit of bounce, but that was the target area, wasn't it? We had this. There we are. That 9,196 or 9,000, under 9,200, which we're back to now. So again, it's another one sort of hit target. So again, we're short, long, didn't work out. So it's a losing trade, but the continuation trade has worked out and got us to that target zone now on a 5-minute time frame at 917. Was that a low for the? I don't know what that green line was. No, it's not. Oh, it was that low from Friday, wasn't it? Friday's low. There we are, 10 o'clock Friday low, which we've already got to again today. So again, you can see there on the hourly time frame, very much under in the under half of the Bollinger Band, testing it on open this morning, but moving down again. So that's remained short. We're at the bottom end of the Bollinger Band, moving down. Bit of volatility as the top upper moves up and the lower moves down. Bit of a squeeze there, so that's the move. The volatility moved down, and we're still short here. Moving down. No sign of a turnaround in the stochastic, so that remains short on that hourly time frame. So there we are, my friends. Hope you have had a good start to the session, as good as we've had here. More details on any of my strategies you can find on our website. Look at our webinar page, scroll through them. It's all there. If you are new to the proptrade.com, it's very straightforward. It's very transparent. It's a very cost-effective way to get into the world of trading using, sort of the art simulated accounts. They're paper trading, if you like. But you pass the challenges. You buy a challenge, basically. It's like you give a few $100. We give you the equity to trade. So if you've got $200, you can get a £25,000 account, $175, a two-step challenge, or if you want to go to a single one-step challenge, a $25,000 account for a one-step challenge is the same price. If you are completely new to the proptrade.com, you've not used this coupon before, we offer new clients a 25% discount. So new 25, you can use this once, gets you, as you might expect, or perhaps you don't expect, but you get a 25% discount off our recommended retail price. So you get for $131, you get $25,000 worth of trading equity. You've got in this particular challenge, the Express Challenge, you have a one step to get through before you get to your funded account. So if you make 12% profit in your challenge without losing either 4% during the day, which you shouldn't be doing anything like that. If you kind of make $3,000 and you're going to lose $4,000, look at it's mad, isn't it? Maximum loss over the period of the trading account is 7%. So you've got a bit more. You can lose a couple of percent a day. But bear that in mind. So maximum loss of your 25,000 is $1,750. Think of it in dollar terms. You can trade the news like we, although opening trades for the start of the stock markets are not treated as news. So you can trade that volatility if you want to, as you just saw. It can be very risky. You can also trade the weekends if you're interested in trading crypto and other assets over the weekend. You need to be trading for at least 3 days. But you pass that, you make your $3,000. You then move to a funded account stage. Do your regulation, your KYC, and so we know who you are, you know who we are, and we then allow you to trade the funded account. And again, if you're successful with that, whatever profit you make, there's no profit target with this one, but again, obviously, you don't want to be losing too much, otherwise you blow the account. So 5% this time, 10% is the maximum loss. It's a bit more relaxed with your funded account. But you remember, you've got 20 because you've bought $5,000 challenge. You have a $25,000 stipulated account. However, obviously using live cash, live feeds, live as we saw on the markets now with the spreads moving around in real time. Uh, any profit you make, you can keep 80% of it. It's as simple as that. If you apply for it on the Thursday, you get paid on the Friday, regular as clockwork. So come and give it a go, my friend. Well, you have got something to lose. You've obviously got $175 to lose, $130 to lose if you blow the account. Or you're not successful. However, think of that as an investment in yourself. What's $100 investing in yourself with the potential to make? The sky is the limit, literally. If you have a strategy or an approach that works, it doesn't break any of our rules. I mean, the rules are very, very straightforward. There's nothing. We don't want you risking more than 3% on a particular trade idea, continually repeating the same trading rules. You can do that, but if you're short term, within an hour, do it again within an hour. Or if you're a swing trader, absolutely no problem. But they're very, very clear. There's nothing. And just ask the guys at the support center in our Discord group. So you need to get on Discord, just a chat bot, and the general chat is where all the questions are. So a ticket allows you for the support guys to investigate. Johnson, Thompson, and Katzen are our three main support guys, and they're there all the time. Not quite 24 hours a day, but it feels like it all sometimes. He was yesterday 5:30 on a Sunday. Thompson was answering some questions. So um, do come and join us and ask any questions here. All my trading, the end of day, I share my end of day trades, not the short term trades. It's just too many, it's too quick. My end of day trades here on the Trading Strategies blog are all put up there. So there were the three we took on Thursday night. They're all still open. I didn't actually set a target for the Dow. There's the targets we just talked about for the yen and the Kiwi. So we had a successful week last week. We were up 984 and 86 points for last week. However, 800 of those points were on the indexes. So we made 185 points on the Forex and 800 points on the index. Obviously, from the point that the indexes move much more than the Forexes do. So we were 4 and a bit percent, 4.3. Hang on, I can't remember that. Yeah, 4.4% we made on our indexes last week. The Nasdaq was 3, and the S&P was 1.4. And so we made 185 points or pips on our Forex trades. Interesting, last week, I haven't checked this, but it's the first time from as long as I remember, we only had 13 trades, but every single one of them was a winning trade last week. So interesting times. Okay. Better go. I just realised that I'm going out, aren't I? And I'm really late already. I'm gonna have to stay. So take care, everyone. See you soon. See you on Thursday. Have a safe trading week until I see you again. All the best, everyone. Bye bye.